I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
And we've got the Board of Education norms, which that can be reviewed on your own, and I need a motion to approve the agenda.
So moved.
I have a first, I have a second. Martha, Jim, all in favor?
Aye.
Any opposed? Okay, and then we have unfinished business. Resolution authorizing insurance and sale of the $10 million series 2023 general obligation bonds.
Tonight we have here Courtney Wegman from LJ Hart and Company, and also we have Dr. Lindsay in his screen. So thank you both for being here. I'm going to turn it over to now.
Big thanks for making this meeting. I know when Larry went to market, he asked me if I could contact the school to see if we could get a special meeting. So I thank all the board members for making that work on very short notice. It's a huge benefit to us, and I hope to you as well, as far as being able to get the bonds sold. Other thing, just side note, whenever I was on lunch today, I saw that St. Genevieve was named, I think, one of the top 10 small cities within the country, which was awesome. I was like, yes, and I'm going there tonight. So fabulous. In front of everybody, there's a packet of information. I'm going to go through the first couple of things, and then Dr. Lindsay will go through the last two items. So the first thing, I have the U.S. Treasury yield curve. The reason I printed this is because whenever I go through the interest rates and the yields that the board can lock in, it's going to look a little strange, because normally you see shorter term maturities have lower yields and the longer term maturities are going to have higher yields, but there is a bit of it goes down and then back up again. So the biggest thing, if you look through that 1 year to the 7 to 10 year on the green line, you'll see that the yield curve is inverted. So we have higher yields with the shorter term maturities and lower yields with the longer term. So that's just to give the reasoning why it's going to look a little strange when we get to those actual rates. So with the next packet that's paper clipped together, when I was here last summer and we sold the first 10 million of bonds, at that time I had some projections on what the next 10 million might look like, assuming that the district issued these in September of this year. So, a whole nother year later. As you'll note in the top left corner of the first yellow paper, it says September 1st, so that was the issuance date. We had planned to always sell the bonds with that 5% interest rate and sell them at a premium in order to generate additional funds for all of those projects that were approved last year. So if you go to page 2, the second yellow paper, you'll notice the yield, that fourth column. I was assuming all of these bonds, and again, estimates, were sold with that 5% coupon, which is the interest rate that you pay interest expense on. So what the investor actually receives with that yield to 4%. And then the gap between the 5 and the 4 is what's going to generate that reoffering premium. So if you take the difference between the dollar price, the final column, as well as the $10 million, you'll get what the reoffering premium was estimated to be, just over $283,000 at that point. Fast forward a few months, got the phone call from Dr. Taylor that the district wanted to issue the next $10 million of bonds. On page 3, these are the interest rates, and on page 4, the yields that the board can lock in this evening. So, as mentioned, we will be selling all 10 million at 5%. We do have investors lined up. If we go to page 4, you'll see those yields now from 2024 to 2031 range from that 3.35, and as I'd mentioned, so we have 3.35, 3.35, then it goes down 3.3, up a little, 3.32, back down, 3.2, and then more of that normal 3.3, 3.35, and 3.4. So just looking at that yield curve first, just to help explain where that comes from. projecting all of those out, taking the difference between the dollar price and the maturity value, the reoffering premium that can be locked in, just over $551,000. So about a $267,000 increase from what our original projections were. These bonds do also carry that the 5-year call feature, so they're going to be callable in March of 2028, which means at that point, if there are excess funds within your debt service fund account, you can either make prepayments, or if it's economical to refinance the bond, you can move forward with a tax-exempt current refinancing at that time. The sources and uses of funds, so how much money is actually going to be deposited within the construction account, is on Schedule 5B on page 5. So we have the $10 million of bonds being sold, the reoffering premium of just over $551,000. Using all of those funds, we pay the cost of issuance, so the bond counsel, the legal fees, the official statement, which I've got a 1 page of that within here that was sent out to the investors in order to market the bonds. The only ongoing expense that the district will incur is that registrar, paying agent, and trustee bank fee. So it's initial $400, $300 each year, which is identical to what you've been paying. Actually, just a bit cheaper, because BOKF will be the paying agent, the trustee bank. They do not charge a 6% miscellaneous fee, so it will be a flat $300 as opposed to $318 with some of your other bond issues that you have. And the underwriting fees and expenses, so fees to LJ Hart & Company that we share with the investors whenever we are selling the bonds on your behalf. And registration fee with the state auditor, so $1,000 in order to register those bonds. So after paying those cost of issuance, again, all one-time fees except for that $400, and these are identical to what the district paid on the first $10 million last year. On March 22nd, $10,421,230 will be deposited into your construction account. On pages 6 and 7, for ease, it's our cash flow analysis. I'm going to skip both of those and just go to page 8 because it basically just takes everything and blows it up. It's just, here's all your revenues, here's your balances and your payments. I do want to point out that as far as the assessed valuation that I used within the cash flow analysis, it's the one that is more realistic based upon what's going on with some of the protested taxes and what can be reasonably expected to be collected on an annual basis. However, having those short call features, once everything goes through the state tax commission, if it comes out to where the municipalities are the benefactors as far as that increased assessed valuation, then we can make any adjustments we need to because you will have that flexibility still. So when we structured this, I'm just looking at those revenues that I mentioned based upon the assessed valuation that is more likely going to be receiving revenue from. The balances, so as of the end of last year, 2022, just over $2.1 million, to make payments of the following year, this year, of $1.5 million, with that balance increasing to estimated of just $3.4 at the end of this fiscal year. Then you'll notice each of the years going forward by adding in this additional $10 million, the balances are just slightly less than your payments. However, the first glance, it's, well, how are we going to make the payments? Because we have a balance as of June 30th. So if you think about what happens in September or in August, you're going to have your tax rate hearing, set your tax rates. You make an interest payment in September. Tax bills are going to go out around November, December. You're going to get the majority of your money for the debt service fund account within that December, January, maybe into February time frame. You make your large payment in March. Usually there's not a lot of revenue that still comes into the debt service fund account after that, and you have your June 30th balance. So you have your balance plus a lot of revenue and then your large payment. That small interest payment you have in September, you have more than adequate balances in order to make that before your balances are then replenished again with those tax dollars. Any questions on the numbers? So then the single page right behind that little packet with official statement at the top. So as I mentioned within those cost of issuance, the official statement, preparation, and printing, this is just the cover page. It's usually about a 3/4 inch document thick. I did not print all of them. Unless you're really having trouble sleeping, then it ends up being something good to help you fall asleep. But it's the document that we provide to investors in order for them to understand, what the district is using this 10 million for, as well as information on the district. So your largest taxpayers, your largest employers, your enrollment, in order for them to make an informed decision. And then it has your audit from the most recent year, so then to 2022 attached to it as well. You're up.
Hello, it's good to see everyone. It's good to be back in the district. I got here a little bit early. Campus looks great. Talked to Brian Kreider for a minute. So I've had a pretty big evening already. So what I will do is go through the resolution. So you have a copy of that that would be next in your packet. The resolution is basically the legal document that's actually approved by the board that locks in the interest rates, the maturity schedules, and the call features, among other things. Basically the numbers that Courtney has already detailed for you. There are a couple things that I want to point out and just highlight. So if you'll flip the first page to page 2. Basically, the title of the resolution is all the information that's in all caps. And I'd like to just give you a minute to read through that. Matches up with your ballot language and the information that you already have. Okay, a couple other items that I want to highlight. If you'll turn to page 5. Section 2.2, description of the bonds. That section basically details the maturity schedule and again matches up with the information that Courtney has already shared with you. If you'll flip over to page, section 3.1, which is on page 11. Section 3.1, optional redemption. That's where the information is about the call feature. As Courtney mentioned, it has a 5-year call feature that allows you some flexibility in the future, depending on what happens with assessed valuation growth and the market. And then the last thing that I would point out in this document is way over on page 25. Section 11.6. This details the continuing disclosure requirements of the district. Although this is a district responsibility, we assist our clients through that process. It's something that you already do on your existing bonds. It's required to be done by the end of the year, and so we assist the district through that process. Any questions on anything that I highlighted or anything else in this document? Okay, the final piece of the handout that you have is a draft news release. This is something we provide to you. You can use it as is. You can modify it as you wish. But this is just something that highlights a few things about the bond issue. It does talk about the 70.52% of the voters that approved the bond issue, which is really a fantastic number, and really a tribute to the administration and the board that the community has a lot of trust that you guys are going to use the funds for what you said you would use the funds for, and trust in what you've done in the past with your bond issues. Any questions about it? Okay. Any questions for either of us then?
Just a quick question. How much was the proceeds from the first 10 million over premium? Was it 700?
I think
Thousand?
net after paying cost of issuance, it was right at 10.7 million that went into the construction fund, yes.
Okay.
And the biggest reason why the premium was so much larger, those were the longer term bonds. So they ranged from, I believe, I'll tell you, cash flow. 2035 to 2042.
Okay.
As opposed to 24 to 31.
So agreeing to that 5% coupon, we've generated an additional $1.2 million.
Yes.
Any other questions for us? Okay, thank you.
Thank you.
Motion.
I'll make a motion to approve the resolution authorizing the issuance and sale of $10 million Series 2023 general obligation bonds with LJ Hart and Company as presented.
I'll second.
We have a first and a second, all in favor?
Aye.
Any opposed? Motion carried. Next, I have a motion to adjourn. Martha and Jim.